It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to the Real Estate Breakfast, breaking down the Australian property market with one conversation at a time. Yes, every week we talk to some of the biggest voices in real estate, unpack the trends, the numbers, and what is really happening behind the headlines. If you'd like to contact us and share your thoughts on what is happening where you are, you can do that. You can send us a voice message below or email us to myrealestatepodcast@gmail.com. Well, the Saturday Property Show is back tomorrow, and we're going to be in Dubai taking a look at the property market under fire, quite literally. Investors have dropped off. We talk about how others, including Aussies, are managing expectations in this tense property market. So that is coming up tomorrow morning. It is a Friday, the end, yes, of another working week, April the 17th. Happy birthday if you're celebrating a birthday today. Victoria Beckham, she is celebrating with you. She's turning 52. Jennifer Garner, she is turning 54, and Rooney Mara, she is turning 41. And also on this day, I see Apollo 13 mission safely returns to Earth, and the movie with Tom Hanks is on Netflix at the moment. That is a fantastic watch, great movie. And something else this weekend you might want to take a look at that I saw a couple of nights ago, Castaway with Tom Hanks. Boy, does that movie still hold up today. And it was made back in 2000, a Robert Zemeckis directed film. And the Australian property market, let's talk about that, because at the moment it has a clear theme emerging, and that is resilience in trading, but growing pressure around the edges. In Sydney and Melbourne, buyer activity is noticeably more selective. Open home numbers remain steady, yet agents are reporting longer decision times and increased negotiations, particularly in the mid-range price brackets. And top of mind is cost pressures. Yes, we've got the rising fuel prices. They're flowing through to construction and transport, and that is just adding further strain to an already elevated building cost. Now, the market hasn't yet turned, but it is less aggressive, more cautious, and increasingly driven by good sound instincts rather than momentum. Is that how you are finding it at the moment? Well, let's go to Sydney, and we're catching up with Chris Gray, the founder of Your Empire Buyers Agents, which is also the same name for when Chris was on Sky News Business for 10 years. Welcome into the Real Estate Breakfast. Yeah, Castaway, that Tom Hanks movie. Did you ever see it back in the day?
I did, and you talking about year 2000 is a happy memory, because from where I was standing, the Sydney market for the next couple of years was moving at about 20% a year. I was earning a paltry sum of 80 grand as an accountant at Deloitte's, or 60 after tax, but my properties were rising at $600,000 a year. So a pivotal moment for me to retire from full-time work. So definitely remember those couple of years.
Yeah, those numbers stack up, don't they? And just a quick shout out, talking of Castaway, a shout out to Vince Martin, the Aussie actor who was in that movie. Yeah, a little cameo by him. Now back to you, Chris. You started young, didn't you? And then built your property portfolio.
Yes, so I grew up in the UK, started investing at 22, worked out a 3-bedroom house was cheaper than a 1-bedroom unit because I could rent 2 rooms out and live for free. Carried on building the portfolio in Australia. And again, 2002, I couldn't justify doing my 60 grand job when I was earning 600 from property. There was no buyer's agents in those days, but a lot of people said, "Oh, Chris, you're young, you're 31, how did you do it?" So started teaching them, and then they said, "Look, we don't want to learn, can you do it for us?" And that's where the business started 20 odd years ago.
You know, I said in that lead up that the market hasn't turned. It's less aggressive, more cautious, and increasingly driven by this good sound instincts that we talk about. A lot of people at the moment, they're trying to figure out when is the perfect time to buy. Of course, we're always saying there is no such time, a perfect time to buy. But when the market is turning, that is, of course, when a lot of people look and say, yeah, probably now's a good time.
Well, it's funny because the majority of people are actually opposite. So people love investing when the market's rising because when they go and tell their colleagues or their family friends, they're all supported. Yes, the market's rising, it's a good time to buy. But when it's turning, or there's a time now when interest rates are rising, there's potentially more sellers on the market, not many buyers. If you go into work and say, I'm going to spend $1 million or $2 million on a property, most of your colleagues will probably turn around and say, don't you read the papers? There's a war going on. The interest rates are going up. The market's going to crash. The world's coming to an end. That's the worst time. But I bought half my portfolio in the global financial crisis of 2009, 2010. That is the best time to buy. So either if you're upgrading or you're building your portfolio, you should be wanting these times, not the boom times, because the boom times, you buy a worse property for a higher price because of competition.
Yeah, it's a good point. Tomorrow, as I mentioned, we are in Dubai. Same kind of a scenario. You've got people that are expats exiting the UAE, and then you've got property investors looking at buying, and some of those prices, they're starting to move down.
Yeah, so the thing that scares me about Dubai, and I've been to, I spend a lot of time over in Asia and Middle East as well, is where you've got no supply limits. You look at the classic CBDs anywhere around the world, and there is no height limit. You can keep building higher and higher, and they're always trying to build the latest, highest tower. But most locals, say in Sydney, don't want to live in the CBD. Dubai is different because it pretty much is a CBD. But certainly, say in Sydney, if you come out to the eastern beaches, the Lower North Shore, the inner west, where we have 3-story height limits, only blocks of 12 rather than blocks of 500, that's the biggest driver of property. When you've got no supply and you've got lots of high-income people that want to live there, that pushes the price up. Whereas when you go to Dubai and you look outside of your hotel and you can see to the horizon full of desert, and especially in Dubai when they actually recreate land, it's a scary thing for a normal, I guess, traditional property investor like myself, because there is no limit of supply.
And so many of these expats out of the UK, they have migrated there but are trying to figure out what is their next move. So just quickly having a look at the Sydney property market, how busy are you at the moment, and how much of an education piece with your clients are you having to use and engage at the moment?
I've been trying to educate clients for 25 years. And when I first started, my first ever public speech was to a CPA Congress, so the accounting body, 700 people at Darwin Harbour as my first speech. And I thought, this is magic. They understand the numbers. They're very logical. They've got no emotion. They're going to be 100% my clients. I'll never need to do any marketing for the rest of my life. But 99.9% of it they get because it's all numbers and there's no emotion. But they've still got that 0.1% of emotion to go against the grain or to push themselves. And so every time we have GFC or COVID or now interest rates rising or the Royal Banking Commission, again, we tell people logically this is the best time to buy, but people don't buy. They all wait. And just like with COVID a few years ago, they all enter the market on the same day. And that's when the market, if you remember, I think in 21, it went up 20 or 30% in many parts of Australia because everyone operates like sheep. So we should be flat out at the moment. We've still got clients. We've got clients from 600 or 700 grand to $10 million plus. But again, we've had other times we've had 70 clients on the books at any one time, but that's in the middle of a boom when it's almost impossible to buy and you'll probably pay an extra 5 or 10% every day.
We are talking to Chris. He is a property investor. He's a buyer's agent. He is in Sydney. When we come back, we'll look at some of the finer points on what a buyer's agent does. That is coming next.
Every week, unravel the real estate market to help guide your real estate journey. Listen to expert perspectives with exclusive real estate conversations. and supercharge your knowledge base with us.
It is a Real Estate Friday, working into another weekend. This week has absolutely rocketed by. I'm not sure the sort of week that you've had, but we are talking to Chris in Sydney. Let's talk about some of the finer points that a buyer's agent actually provides to you. So some of them are searching for off-market and pre-market properties not publicly advertised. They interpret pricing in a volatile Sydney property market. And let's face it, it's a little bit volatile at the moment, where guides especially can be misleading. Also, they conduct suburb-level research on growth, infrastructure and demand. They can shortlist properties aligned with client strategies and budget. Boy, that list, Chris, it goes on, doesn't it?
It is. It's lots of different things for lots of different people, depending on if they're time poor, if they're an armchair investor, if they're buying the family home, and I guess how much money they've got to spend as well.
Let's talk about the real estate agent versus the buyer's agent, because there's always some sort of confusion when it comes to this, because a real estate agent works for the seller and is focused on achieving the highest possible price for the property. A buyer's agent works exclusively for the buyer, focusing on securing the right property at the best possible price and terms. And then you've got in the mix of that the property buyers that are working for developers.
Yes, exactly. So that's the hybrid. It's the buyer's agent that you think is working for you, but he's actually working for someone else and probably getting paid twice the price.
So just explain that a little bit further between the buyer's agent and the buyer's agent working for the property developer.
Sure. So again, to take it back to basics, so the sales agent, say you've got $1 million property, you could go off and sell that yourself, and everyone thinks, oh, it's nice and easy, but a sales agent will charge you, say, 2%, so $20,000. And the old generation was, why would you pay someone $20,000 to sell a property that you could sell yourself? But a really good agent can sell $1 million property for $1,050,000 or 1.1 at auction. So then comes the buyer's agent. If the vendor has hired a professional to help him negotiate, why not get someone on your side that's a professional to help you negotiate? Because again, we buy 99.9% of the investments we buy, we never go to auction. So we tell our clients, don't even trust us, don't trust anyone in property. Let's get an independent valuation to prove what it's worth on a bad day. And they'll say $1 million. So we'll go and try and buy that pre-auction for $1 million. Because if at auction there's two other people and one's approved to 1.1 million, one's approved to say 1.2, they'll keep bidding against each other because they haven't done the research to know it's worth $1 million. They get to 1.1 million, say, and the guy says, well, I only paid $1,000 more than the next person, and that's market value, which technically it is. But it just means that you've got two people at auction that got too much money that don't know what the property's worth, and they've basically moved the price to give it that 10% premium.
Yes, and just before I let you go, the challenge with the buyer's agency space in Australia is the relatively low barrier to entry. Any comments that you've got to make about people that are getting into the space of becoming a buyer's agent?
Oh, there is, because everyone's seen the TV shows. They think it's super easy, and they think the job of a buyer's agent is to go and look at $10 or $20 million homes and go and negotiate for billionaires. In reality, it doesn't work like that. Most of the job is trying to find clients and market and kind of hustle and do the legwork. And it's not necessarily seeing these beautiful homes. And again, the hard thing is for a lot of people is effectively we charge, say, 2%, the same as agents. And so we've got to convince someone buying $1 million property to pay $20,000, which sometimes that's hard if you've never been around sales before. And this is where we have the hybrid buyer's agents that are actually working for maybe a sales agent, or they're working for a developer or a house and land package. And they'll actually sell their services for free and label themselves as a buyer's agent. But in effect, they're probably not making $20,000, they're probably making $40,000 kickback from the developer or the house and land. And you'd think, well, why are they getting twice as much? Well, if a developer's got a massive block of units which he can't sell, he's more than happy if he's put the price up from $1 million to 1.1, he's making an extra 100,000. He can afford to pay someone 40 or 50,000 if they can convince someone that hasn't got a clue to go and buy their property instead. And they think, well, I've saved 20,000 on the buyer's agent's fee, but in reality, they've actually overpaid $100,000.
That's the tale of the tape, as they say. Chris, we will wrap it up there on our Friday morning. Thanks for coming on to the Real Estate Breakfast. Have a great weekend coming up.
My pleasure. Thanks for having me.
We connect you to the best real estate information across Australia. The Real Estate Podcast.